Hello students, in our previous lecture we are solve a practical problem number 9 on computation of income from partnership firm. In our today's lecture we are going to solve a last practical problem on computation of income from firm. Okay, that is problem number 10. Here Alu, Babu and Maru are the partners in a firm sharing profits and losses in the ratio of 4:3:3. The following is the profit and loss account of the firm for the year ending 31st March 2020. So Alu, Babu and Maru are the three partners sharing profit and losses in the ratio of 4:3:3, and his profit and loss account is given here for the year ending 31st March 2020. Particulars rupees, particulars debit side, credit side. But we start to read the problem from adjustment. So go to additional information and read the additional information carefully. So here additional information is given here, that is miscellaneous expenses paid include the private expenses of partner Babu rupees 10,000. So miscellaneous expenditure includes rupees 10,000 expenses of partner B, that is private expenses of partner Babu. Okay, so it is important. So miscellaneous expenses, find a miscellaneous expenses in profit and loss account and make a star in front of miscellaneous expenses, because additional information is given on miscellaneous expenses, that is 10,000 is included in miscellaneous expenses which is related to the private expenses of Mr. Babu, rupees 10,000. Okay, so here we make a star in front of miscellaneous expenses. Then second adjustment or additional information is advertisement include rupees 4,000 which is not related to business. Okay, so in advertisement expenses 4,000 is included which is not related to business. So find out the advertisement in profit and loss account and make a star in front of advertisement, because in advertisement rupees 4,000 included which is not related to business, which is not a business expenditure. Okay, so we make a star in front of advertisement. Then second adjustment, it means those expenses which is not related to business are disallowed. So this 4,000 is disallowed expenses of the business, so that we make a star in front of advertisement. Then 1/3 of car expenses is related to personal use of the partners. So car expenses, the additional information is given on car expenses, that is 1/3 car expenses is related to personal use of partners. So it is a adjustment or information given on car. So find out the car expenses in profit and loss account and make a star in front of car expenses. So car expenses is given rupees 12,000. So 1/3 car expenses is related to personal purpose of partner. Remaining 2/3 car is used for business purpose or profession purpose or firm purpose. Okay, so 2/3 car expenses is allowable expenditure of the firm and 1/3 expenses of the car is disallowed. So 6,000, 3,000, 4,000, 12,000 divided by 3. Okay, so 12,000 divided by 3 multiplied by 1. So 12,000 divided by 3 multiplied by 1 is equal to 4,000. So 4,000 car expenses which is not related to the firm, which is related to the private purpose of the partner. So this 4,000 is disallowed. Okay, got it? Yes sir, got it. Okay, then the next adjustment, so donation. So donation is given to any institution, any charity, are disallowed expenditure. Got it? So donation, all donation are disallowed. Then depreciation is allowable as per the income tax rule amounted to rupees 30,000. Okay, so allowable depreciation is rupees 30,000 as per income tax rule. So find out the depreciation in profit and loss account and see whether the depreciation is charged more than 30,000 or less than 30,000. So here allowable depreciation as per income tax rule is rupees 30,000, and here depreciation is charged on profit and loss account debit side is rupees 30,000. Sorry, is rupees. So here depreciation is allowable as per income tax rupees 30,000, and depreciation is charged on the debit side of profit and loss account is rupees 40,000. So make a star in front of depreciation, that is excess depreciation is charged on the debit side of profit and loss account, that is 40,000. Okay, then next adjustment, rate of interest charged on capital is at 15% per annum. So 15% rate of interest on capital is given. It means we compute the interest on capital of each partner. So interest on capital is given here, that is 12,750, sorry, 7,500 and 10,500. 12,000, 7,500, 10,500. So total is 30,000. So we easily compute a interest on capital, that is 15% interest on capital is charged. Here remember the rule, that is 12% interest on capital is exempted. So remaining 3% interest on capital is taxable or disallowed. Then last adjustment is that Alu and Babu are the working partners. Here working partner is given, that is Alu and Babu are the working partners. It means Maru is not a working partner. So Maru's remuneration is disallowed and it is added in net profit. So here net profit is given in the problem. So here we read all additional information and make a star in front of those items which adjustment is given. So here we read a debit side of profit and loss account, that is to salaries. So salaries are allowable expenditure of the firm. Then rent is allowable expenditure of the firm. Then adjustment or additional information is given on miscellaneous expenses. Okay, then to car expenses or additional information is given, that is 1/3 car is used for private purpose of partners. Then advertisement includes rupees 4,000 which is not related to the business. So income tax, so income tax is also a personal expenditure of partner. Okay, so income tax is disallowed. Here we make a raid to those items which is not related to the business. So income tax is not related to business. Here we make a star in front of this item is related to business, but some expenses which is included in this expenses are related to the private purpose of partners. So only private purpose expenses is add in net profit. Got it? Then loss of cash kept at the partner's residence. So loss of cash is not a firm's loss, it is a loss due to the irresponsibility of the partners. Okay, so it is not considered as a loss of firm. Then donation, So donation is all donation is disallowed. Okay, so amount of donation is rupees 26,000. Okay, is rupees, sorry, donation, amount of donation is rupees. So amount of donation is not given here, so we write. So amount of donation is rupees 4,000. Okay, so donation, all donation are disallowed. Then commission to partners allow. So commission is a part of salary or remuneration. Commission is a part of remuneration of allow. Then salary to partner, it is allowable, but here salary is a part of remuneration. We add the remuneration in net profit, then we get a deduction of working partners only. Then interest on capital. So interest on capital, adjustment or additional information is given, that is interest on capital is given to each partner at the rate of 15%. So here 12% interest on capital is exempted, so 15% is more than 12%. So find out the difference, that is 3% interest on capital is excess charge, so excess charge is disallowed. Okay, then depreciation, so adjustment is given, so adjustment is given on depreciation, that is 40,000 depreciation is charged on the debit side of profit and loss account, and in additional information the depreciation is given, that is according to the income tax act rule, income tax act 1961, the allowable depreciation is rupees 30,000. It means rupees 10,000 is excess charge on the debit side of profit and loss account. Okay, then net profit 1,60,000. So net profit is important while computing the income from firm. Okay, amounted to rupees 1,60,000. Then we read all the debit side here, then we read credit side of profit and loss account. Here by gross profit 4,08,000. Okay, then by profit on sale of car, so profit on sale of car is capital income of the firm, so it is income from capital gain, so it is not considered as income from business. Okay, so it is deducted from net profit. Then bad debts recovered previously taxed, so it is also a income from other source. It means the bad debts which was previously taxed, or the on the bad debts in previous year it was taxable or disallowed in loss, disallowed loss of the firm. So in current year, in assessment year, these bad debts are recovered. So the bad debts recovered which are previously, or which was previously taxed, are considered as income from other source. Got it? So it is a income from other source, it is not a income from business or firm, it is not a income from firm. Then by interest on bank deposit, income from other source, so income from other source is deducted from net profit. Dividend is also income from other source. Got it? Then we read all the debit as well as credit side of profit and loss account and additional information. Now we are going to solve a problem here. Prepare a 3-column for computation of income from firm. So here income from firm, name of SAC. Okay, no name of SAC is not given. Okay, then assessment year. Assessment year is 2020-2021 and previous year years is 2019-2020. Then we prepare A3 column, particulars rupees. Okay, particulars rupees. Particulars rupees. Here net profit as per profit and loss account. So net profit as per profit and loss account is given in the profit and loss account. So 1,60,000 is the net profit of the firm. So net profit 1,60,000. Put the 60,000 in outer column. 1,60,000. Here we deduct less inadmissible expenses debited to P and L account. Okay, so here the expenses which is not related to the firm are add in net profit. So we find out the expenses, but we start from additional information, that is miscellaneous expenditure include. So highlight the miscellaneous expenditure because we consider the miscellaneous expenditure in computing the income from firm. Okay, so here miscellaneous expenditure includes rupees. Miscellaneous expenditure expenses into bracket include private expenses of partner Babu. Got it? Amounted to rupees 10,000. Okay, then next additional information, advertisement includes rupees 4,000 which is not related to business. So here advertisement includes rupees 4,000. So this 4,000 is disallowed expenditure of the firm. So advertisement includes expenses which is not related to firm, amounted to rupees 4,000. Got it? Yes sir. Okay, then second adjustment or third adjustment or additional information, that is 1/3 car expenses. So 1/3 car expenses is related to personal. So find out the car expenses. So here car expenses, so make a or highlight the car expenses for our understanding, that is we consider this and additional information also. We consider the additional information also for computing the income from firm. Here car expenses into bracket 1/3 car expenses relating to personal use of partners. Okay, so here 12,000 divided by 3 multiplied by 1, so amount in column is rupees 4,000. Got it? Then next additional information, that is donation. So donation, all donation are disallowed. Then depreciation, so depreciation is given here. Okay, so depreciation is rupees 40,000 charged on the debit side of profit and loss account. So excess depreciation is disallowed. That is 40,000 minus 30,000, we get a excess depreciation amounted to rupees 10,000. So 10,000 excess depreciation is charged on the debit side of profit and loss account. So this 10,000 is disallowed. Then rate of interest. So rate of interest on capital is charged more than 12%, so it is taxable. So we read all adjustment and we add all additional informations to net profit which is not related to the business. Now we read a profit and loss account debit side. We already find out the expenses which is not related to business. Just add these expenses in the net profit. So here income tax is not related to the business, so add in net profit amounted to rupees 50,000. Okay, so here add income tax 50,000. Then next, loss of cash at partner's residence 26,000. Loss of cash at partner's residence amounted to rupees 26,000. Okay, 26,000. Then donation, so donation is disallowed 4,000. Donation is disallowed, amounted to rupees 4,000. So add donation 4,000. Okay, we add all disallowed expenses here, or we taken into consideration all disallowed expenses in inner column. Now here excess interest on capital. Okay, so excess interest on capital charged here. Okay, so for interest on capital of, so here interest on capital, salary, commission, all are the part of remuneration. So first of all we add all the disallowed expenses. So excess interest on capital is disallowed. Okay, excess interest on capital is disallowed. So here for alu 15%, so here add alu at the rate 15% interest is charged on capital amounted to rupees. So amounted to rupees is given here. Okay, amounted to rupees 12,000. Okay, 12,000. So 15% is equal to 12,000. Then less exempted up to 12%. Okay, so 12%, so 12,000 into 12 divided by 15, 9,600 is exempted. So deduct this 9,600 from 12,000. We get a taxable interest, that is 2,400. 2,400 is taxable. Then Alu, Babu and Maru. So interest on capital is given to Babu rupees 7,500. 7,500. So Babu at the rate 15% amounted to rupees 7,500. 7,500 less exempted up to 12%, that is 7,500 into 12 divided by 15, 6,000 is exempted, remaining 1,500 is taxable. 6,000 is exempted, remaining taxable. 1,500 is taxable. 1,500 is taxable. Then Maru at the rate 12% amounted to rupees 10,500. Okay, 10,500. Again we confirm the interest is given to Maru. Okay, that is 10,500. So 10,500 less exempted up to 12%, that is 10,500 into 12 divided by 15, 8,400. 8,400. Okay, 8,400 is allowable. So deduct this 8,400 from 10,500. We get a taxable interest of Maru amounted to rupees 2,100. 2,100. Then we consider here all disallowed expenses. Now we make a total. So here make a total of inner column. So here total is equal to 10,000 plus 8,000, that is 4,000 plus 4,000 plus 50,000 plus 10,000 plus 26,000 plus 4,000 plus 2,400 plus 1,500 plus 2,100. So total is 1,14,000. Okay, 1,14,000. So add this 1,14,000 in net profit of the firm. So add 1,60,000 plus 1,14,000, that is 2,74,000. So total is 2,74,000 is the total. Then we deduct a income chargeable under other head. Okay, then we deduct income chargeable under other head. Okay, then we deduct income chargeable under other heads credited to P and L account, that is profit and loss account. Okay, so we find out a income which is chargeable under other heads. Okay, which is chargeable under other heads. Here in credit side of profit and loss account, we find out a income from other source. So here first, that is profit on sale of car, 42,000. So profit on sale of car is capital gain, and capital gain is not a firm's income. Okay, so add this income in net profit. Okay, so here profit on sale of car, inner column, amounted to rupees 42,000. Then bad debts recovered previously taxed. It is also income from other source, because previously the bad debt loss is disallowed. Previously the bad debts is disallowed. Bad debts recovered, it means, and previously taxed, it means a bad debts which was previously disallowed are recovered in current year. Okay, so previously we bad debts, or the bad debts previously we give a tax on bad debt, so it is a income from other source. So in current year it is considered as a income from other source. Okay, so add this in net profit, sorry, deduct this from net profit. Okay, bad debts amounted to rupees 10,000. Then interest and dividend, all these are the income from other source, or both of these income are income from other source. Okay, so these income from other source are deducted from net profit, 10,000, 20,000. So here interest on bank deposit amounted to rupees 10,000, and dividend from Indian company 20,000. Okay, so make the total of this income. So 40,000, 52,000, 62,000, 82,000. So total is 82,000. deduct this 82,000 from 2,74,000. We get a 1,92,000 net profit. 1,92,000 1,92,000 in net profit. Then we add remuneration of partners. So here first remuneration to Alu. Okay, so remuneration includes salary plus bonus, salary to Alu plus commission to Alu plus bonus to Alu. Okay, so salary, commission and bonus, find out it in profit and loss account debit side. Okay, so here commission is paid to partner Alu. Okay, so commission is given to Alu, amounted to rupees 40,000. Salary is given to Babu and Maru. Okay, it means salary is not given to Alu. So here salary amount is nil. Salary is equal to nil. Then commission is equal to, so commission is given to Alu, that is amounted to rupees 40,000, and bonus, so bonus is not given to any one of the three partners, so here bonus is equal to nil. Okay, then make the total of Alu's remuneration, so total is equal to 40,000. Okay, so total is equal to 40,000. Total is equal to 40,000. Then compute a remuneration to Babu. Okay, so salary to Babu, commission to Babu, and bonus to Babu. So salary is given to Babu, so salary is given to Babu, see it in profit and loss account. So here salary Babu rupees 60,000 and Maru rupees 30,000. So commission is not given to Babu, only salary is given to Babu and Maru, and bonus is not given to any one of the partners, so here bonus is not taken into consideration. So salary is equal to 30,000, sorry 60,000 plus 30,000, so here 60,000 salary is given to Babu, commission is not given to Babu, so amounting column is nil. So amounting column is nil, and bonus is also not given to Babu, is equal to amounting column nil. So total remuneration is paid to Babu amounted to rupees 60,000, amounted to rupees 60,000. Rupees 60,000. Then compute a remuneration to Maru. So here remuneration to Maru. So salary to Maru plus commission to Maru plus bonus to Maru. So commission and salary is not given to Maru. Sorry, commission and bonus is not given to Maru. It means salary is given to Maru, amounted to rupees 30,000. Bonus and commission is not given to Maru, so amounting column is nil. Okay, so here salary is given to Maru, amounted to rupees 30,000. Then commission is not given, so amounting column is nil, and bonus is not given to Maru, so amounting column is nil. So total remuneration is paid to Maru, amounted to rupees 30,000. Amounted to rupees 30,000. Then make the total of remuneration of 3 partners and add this remuneration in net profit. So 40 plus 60 plus 20, that is 1,30,000. That is 1,30,000. 1,30,000 is the remuneration. So add this 1,30,000 in 1,92,000. Okay, 1,30,000 in 1,90,000. We get a book profit. Okay, and the amount is called 3,22,000. 3,22,000, and that amount is called book profit. That amount is called book profit of the firm. Okay, then so the amount is called book profit of the firm. Okay, we get a book profit, then we get a allowable deduction or allowable remuneration is deduction for working partners. Got it? So allowable remuneration or allowable remuneration is deducted from book profit under section 40B for working partners only. Okay, so here less allowable deduction of remuneration for working partners only under section 40B. Okay, so here A part, A, that is working partner is Alu and Babu. Okay, Alu and Babu are the working partners, so we compute a remuneration of Alu and Babu. Okay, that is Alu's remuneration is 40,000 and Babu's remuneration is 60,000. Okay, so here put this figure in the allowable remuneration. So salary to or remuneration of working partners is equal to Alu plus Babu. So we find out a remuneration of both the partners, that is 40,000 remuneration is given to Alu plus 60,000 remuneration is given to Babu. So total remuneration is given to both working partner is amounted to rupees 1 lakh. 60 plus 40 is equal to 1 lakh. Then second one is B. 90% of book profit. So that is 90%, that is 90 divided by 100 into 3,22,000. Okay, 3,22,000, that is we get a allowable deduction from these two, whichever is lower or whichever is less. So 90%, 3,22,000 into 90%, that is 2 lakh 2,89,800. Okay, so here we get a deduction of rupees 1 lakh because whichever is lower from A and B. Here whichever is lower from A and B. Got it? So whichever is lower from A and B. Whichever is less. Okay, whichever is less. From A and B, whichever is less from A and B. Here whichever is less from A and B. So here whichever is less, so whichever is less is rupees 1 lakh. 1 lakh is deducted from 3,22,000. We get a 2,22,000, and that amount is called income from firm. Okay, income from firm or total income from firm. Got it? Okay, sir. So amounted to rupees 2,22,000. So here we solve a last practical problem on computation of income from firm. Okay, problem number 10. In our next video we are start our new unit, that is unit number 4, taxation of cooperative societies. Okay, so thank you very much.